Good morning, everyone. It is Wednesday, December 29th, and this is Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today. My name is Todd Rich. I am with Nadex. With me, Brian Caprice from Keep Trading Simple. Very light trading, very thin trading, but we've got some things moving around in the markets today, which are going to make for some interesting potential opportunities. What are we seeing? We're seeing gold and silver completely retracing, and we're going to take a peek at that. But they've been, they were climbing up yesterday, and they've completely retraced. Everything's selling off. What else do we have? We've got a potential opportunity for volatility in oil today with the oil inventory reports. Before Brian and I jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. As I mentioned, you can actually take a look. This is the last couple of weeks in gold. Uh, you know, Now, I mean, it really did rally up in the last few days. The last week, we could see this rally here. We have, now I'm going to come back in on just that part of the chart so you can really see it. Oop. And you can see that overnight we've really sold off. We are coming to a 50% retracement level from the lows in gold recently, but this is a pretty big sell-off. We've also got something similar going on in silver. We'll take a peek at that. Uh, and again, oil, potential mover. We are, when it comes to equities, everything is pretty flat. We're slightly in the red right now. I mean, tiny. We really are essentially hovering around unchanged. But you have to realize the equities, it is in light volume. And when I say light volume, I believe yesterday was the lowest volume trading day on both the New York Stock Exchange and on the NASDAQ. I mean, there is just no volume. Everyone has stepped away. Because of that, you will see pockets of illiquidity and pockets of volatility, which can create potential opportunity. Uh, with that, Brian, I'm going to flip it over to you. Let's take a peek at gold and silver, clearly making a fairly big move today. And then
Yeah.
let's take a look at a setup for oil just for that 10:30. In fact, I'll drop into the chat if anyone wants to take a peek. I'll do the daily FX economic calendar. You can take a look at when the oil inventory reports come out because we had API yesterday, and we've got um, and we're expecting a little bit of a drawdown. Question is do we get as big a drawdown, or is there some other surprise waiting out there for
Yeah.
us for the oil inventories?
So I would say globally right now, everything is very, very slow this week. And again, really what's happening is everybody's looking for a headline, and there's just not a whole lot out there that's really anything different from the narrative. And it's been such a crazy year anyway. I think a lot of the money is just, if there's a setup, they'll grab it, but there hasn't been much out there. Again, waiting for the new year. We're so close at this point. We got 2 more days to go, really. So, like I said, currency front, the biggest mover out there right now is a tie between the dollar CAD and the pound yen at 21 pips in 24 hours. So less than 1 pip
Ouch.
worth of movement. Yeah, less than 1 pip worth of movement. Or actually, I'm sorry, Aussie dollar just jumped to minus 26. So there we go. Just over one, just over 1 pip an hour in 24 hours. Not a lot of big news in the overnight. As far as news goes, as far as big kind of headlines that could change anything today, trajectory wise, there's a Dr. Dre. That's on the biggest thing, and then talking about the Chinese New Year threatening to disrupt global supply chain, which it's normal. It's kind of predicted every year that happens. The one thing we do see, again, as far as one of the big headlines go, talking about inflation surges in the new year. And I think it's interesting to talk about, too, because it's the UK that the news is coming out of, talking about, and they just had a report that came out from one of the think tanks, and they're deeming 2022 the year of the squeeze. They're saying that real wages are basically stagnating at an increase. Now, again, this is wages. The annual increase is only going to go up 0.1%. 0.1%. But the UK inflation over the last year has already breached 5 and may actually hit 6% early next year, the highest in 3
Yikes.
decades. So people are making 0.1% more, but inflation is 6%. They've already raised interest rates one time, and you're seeing that going from 5 to 6 in the early year after they were the first big nation to raise interest rates. Going to show you what next year is going to look like as far as the rising interest rate environment. That you can raise it once and it's going to still continue to go. They're going to have to raise it again and again. It may be that
And they're going to
acceleration.
have to move the number. It's right. And
Yeah.
these little tiny moves aren't going to do it.
Yeah,
I
so
think
that US
you've
one, I'm still
mentioned
saying
that.
it now. It's 6 months yet. We got 6 months before it's probably going to happen. But will that first US raise be a double, a 0.5 versus a 0.25? And how many other nations will follow that same route? Because it looks like the little percentage is not necessarily working. And we saw it in the New Zealand the same way. So, just some food for thought for coming up. But as far as what's moving today, it's a very, I'd say, odd day, but probably because there's just no volume out there. You're seeing the dollar down. You're seeing all the indices minus the Russell pretty much down as the VIX is rising up 1.2%. We're seeing oil down, natural gas down, gold, as you mentioned, down. We were talking yesterday about this is it. It's finally
Hey,
moving
we're
the way it's supposed to
through.
move. And then yesterday at like 10 o'clock, or actually, I guess at 8:30 in the morning, that was kind of the high. We knew we were in an area of sellers. And not only did it slice through 1800, but it actually pushed through some of the other levels. We had this little level at 1796. You can see it kind of did a Harry Potter there. It wasn't a really, really clean break of it. But right now, we were talking about, new bursting levels. Now we got to be talking about the levels that we had lower. We have a buy level coming in at 1782. And then we have a Harry Potter setup at 1775. So question is, in this low volume time frame, and again, it's weird. Money's going out of the indices. It's going out of gold. It's going out of silver. And it's going out of all the cryptos. And it's going out of bonds because bonds are going down. So it's kind of strange that people are just, I guess, storing it in their mattresses.
Holding
Yeah,
cash.
yeah, everyone's going back to the green stuff again. It's one of those things. I mean, the indices are finally starting to break through. It looks like they're just turning. They're basically flat. Not a whole lot of movement. But again, with this continued push down with low volume, I'd be looking for these two areas. And again, looking for a confirmation bounce, meaning it pushes into 1782. Bounces and then comes back. Could be that long opportunity, but if it slices through 1782 like we did 1800, again, then we're looking for shorts below 1775 with targets down here at 1760. Yeah, and again, some of that could be the UK. There's a lot of different things that could be. And silver, same thing. Silver took it again twice as much. Gold is down 0.8. Silver's down 1.6%. And we were close. We were looking for sells, but we were looking for 2362, and it made it to 2340. 43-ish. So it missed it by about 20 cents. And then again, it is tumbling back down again. We had that level that we've had like 3 hits of it. And that level is coming up here pretty soon as well, down here at 2237. So, gold and silver both in similar setups, pushing towards levels. If we base in them, it's a continued short to the downside. So again, they're not getting any. The metals are not getting help. But really, none of the commodities are. Oil's down, natural gas is down 1% as well, and that's gapping all over the place. But yeah, so I guess, do you want to switch to oil then, or did you want to add something?
Yeah, right. I tell you, I'm just a little surprised that silver and gold have made such a dramatic move, but it's in light trading, and
yeah,
this
that's
is
a
what
problem. It doesn't take
happens
much.
in thin markets. Is somebody's looking to do something. Remember, there's only a couple more days left in the year, and anyone who wants to position going into the new year, or if people are looking to harvest, um, you know, gains or losses, you know, and they're waiting till the end of the year to do it, for tax purposes. And people do that, right? If you've got a bunch of gains,
Mm,
um, and you've got something that you've lost in, you'll sell it just to take the tax loss, to offset against your gains. And the other way around too. If you've got losses that you're
mm.
carrying forward, or if you've got other losses and you can lock in some gains and not have to worry about taxes because you've got other losses. So you've got these situations where, people positioning at the end of the year, and then in thin illiquid markets, you'll get moves like this.
Yeah, I mean, at the end of the year, you're not seeing buying. You won't see buying until what, the 4th?
So
You will
yeah,
see selling as people are trying to close it out, capture, for tax purposes, lock in capital gains rates, things like that. You will see selling at the end of the year, but it's not really like a buying time frame. There's no reason to buy and accumulate right before the start of a new year. It'd be easier just to do it in the next year.
right,
So,
and Monday the 3rd, next week. We are open. The stock market is open. The equities are open. NADEX is open. Everything's trading. It is a bank holiday. Globally, I think it's a bank holiday, but the markets will be open. We don't get a holiday around the New Year this year. Let's go ahead and take a look at a trade setup for oil. I mean, I think for today we
Sure.
do have that oil inventory report at 10:30, and it does become interesting just because we are
Hmm.
expecting, I think, a slight drawdown.
Yeah.
And with thin markets, if the number is off, we could potentially 10:30 a.m. this morning take a look
Mhm.
because we could see some action in oil
Yeah.
potentially.
Yeah. So I mean, yeah, the API number came in, and it's listed as red here, but it missed it by such a small amount. We're talking about 0.14. So again, not really the huge kind of miss that we're typically looking at. I think this is consistent. I think next week it's either going to be this week or next week. I think the down draw will be a little bit more than expected in there, and the reason why is because with so many flights being canceled over the weekend, it was just over 10. What is it? Over 10,000 flights were canceled. So
Yeah.
that's kind of a lot of flights. If people weren't flying, they were probably driving somewhere. So I'm assuming we'll get a little bit more of a down draw, and I don't think it's really been worked into the forecast yet. So it'll be this week or next week that we actually see the impact of that. Because remember, this is not gas stations. This is the tanks. So it's a little bit kind of a week delayed behind where the travel is. So it's a little bit there. I mean, yesterday we talked about this big racetrack setup. We had a big push, and we were debating whether this was 3 hits or 4 hits. Well, if you continue that line across, I'll move the 17 forward. If you move that line across right now, you can see either way, we've now based inside of that level. So it's kind of the setup is kind of sitting there already. If you're looking at kind of where the current trends are, see the current trend is obviously down. I could actually, what? This is my opportunity to use the fancy the channel tool here. Where is it? The channel tool. We can go here down and then go across. Look at that. Looks all fancy and everything, right? But the same setup is still there from yesterday. We talked about this level. We had basing. It was buyers, buyers, buyers. Kind of tickled the top of it. Buyers, and it started to base in that level. It's like, yeah, they're going to fail pretty soon. And the question is now, will we get to do it? Will we get the entry? Will we get a true Harry Potter in there? Do we just come down and stop? Remember, when U.S. traders get online at 9:30, 9:30, that's typically where we see oil start to rise, right? That's where buyers come in and boom, oil goes up, oil goes up, oil goes up, oil goes up. When the U.S. trader steps in, if it doesn't hold and it doesn't go up, could it be a big down day? I would say, with potential targets, even down here at 73.62, it's a $2 move. I mean, a typical move is $1.40 to $1.60. That's the average because some days it doesn't move at all. Some days it moves really, really big. Again, this was a low volume move anyway. This is what's capable in low volume time frame. And again, this is this is what $2.80. So even if we take that at $1.40 from where we are right now, $1.40 puts us right there. You can see based off of whoops, I forgot I can't move that one. $1.40 from the bottom of this puts us right there, right? Which is at a 1 to 5.75, almost a 1 to 6 risk to reward ratio based trade. So that's kind of a big one. Remember 1 to 3 is sitting right there. So a one standard news move puts us all the way down here. You can see the
Yep.
difference between the two. So it's quite a large amount. So it's set up. The question is, do we hold here? Does the U.S. trader drive this higher? If it does, remember the strategy is the 35 and 1. If we drive up and maybe the trader, the U.S. trader brings us up into this level, and then again, I think the same thing. I mean, it's a confirmed tested level right here that sellers stepped in. If it's able to rise up to 76.63 in preparation for that news, again, then we'd be short from there. You really got to start looking at this at 10 o'clock to see kind of, is the market driving it higher right before news? That typically is a telltale sign it's going to drop. But remember, it's not a standard, oil inventory reading. It's the last few days of the year. Most of the institutional traders are definitely out, so it's not as big of a manipulated position. But again, it should still work.
And again, the way to kind of look at that is look for those setups. I mean,
Mhm.
because we don't know where this thing's going. We don't know what's going to happen. We don't know what the number's going to look like. But
Yeah.
at 10 a.m. Eastern, you start looking at your 30-minute charts, and you look at those short duration binary options. Is
Mhm.
where there could be some potential opportunity, and then as you get closer to the actual news release, you drop down to a 5-minute, and then right going into the news release, you look at a 1-minute chart. And so you'll be watching the 1-minute chart. You'll be looking at how it's setting up, what you think may happen, and those short duration binary options could get kind of interesting going into as they release the number, and then we'll see if there's going to be some volatility there. But there's some potential opportunity for volatility again. Very light
Mm.
markets, very thin markets, and that's the oil inventories is really the. What do we have? Do we have unemployment numbers tomorrow? I think we've got unemployment numbers tomorrow. The weekly
We
jobless
have the
claims.
Swiss number first thing in the morning at 3 o'clock, and then we have unemployment. We have Chicago PMI as well as natural gas numbers tomorrow. But PMI and natural gas comes in after 9 o'clock. The unemployment
Yeah.
claims comes in at 8:30, and it's expected to be exactly what it was before, 205.
And then
So,
Friday's the last trading day of the year, and we'll see how that goes. And um,
yeah,
there might
there's
be
not even
some,
any low impact news that day.
yeah,
There is nothing on Friday.
nothing going
New Year's Eve.
on
Yep.
other than maybe people wanting to see the markets just be green on the last trading day of the year, just because then they can go into the holiday going, "Hey, the last day was green."
Yeah, I
Uh,
think after the Santa Claus rally, I would have to say last day I would probably right now, and again, we don't know what it's going to do the next 2 days, but if I had to make a prediction, I would say probably down on Friday,
so
just with everything going on. But we'll see. I mean,
we'll see.
maybe
We'll,
there'll
we'll
be
take we'll take a look at it then.
yeah.
So with that for today, a fairly light day, but we do have any questions for Nadex, email us customerservice@nadex.com. Any questions for Brian, email him at support@keeptradingsimple.com. And yeah, what did we look at? Gold and silver both having a sell-off, seeing the price of those both drop. Again, thin, illiquid markets. Equities kind of flatlining, and we've got that potential opportunity in oil with the oil inventories at 10:30. The U.S. oil inventory reported 10:30 a.m. Eastern this morning. Brian and I will be back tomorrow. We will. Thanks for joining us today, and we will catch you again tomorrow. Good luck in the markets, everyone.